We're thrilled that you could join us today. We hope to have a conversation about the VC world post-COVID, fall of 2020. I'll introduce our panelists in just a couple of minutes, but to set the stage for you here, we hope to talk about changes that this team has seen over the last year, which have been rather dynamic and profound. We hope to talk about sustainability in the way that the venture capital world is thinking about it. And then we hope to talk about, what's interesting and innovative and of investment theses for our venture capital community. So with that, let me introduce our panelists today. We have Casey Berman, who is a founder of Camber Creek. That is a company that he, with others, founded 8 years ago, very focused on VC in the prop tech space. Casey comes from a deep real estate background, having worked in real estate management and development for many, many years in DC before he founded Camber Creek. Clelia Peters is a colleague who's worn many, many hats over the years. Presently, she's a venture partner at Bain Capital Ventures, where she focuses on prop tech investing. She was a co-founder of Metaprop in the early days before prop tech really had any cachet or nomenclature around it. And she also serves as the president of Warburg Peters. So she's got boots on the ground as well, touches both the hardscape and the technology. Then we have KP Reddy, certainly last but not least, and KP comes from an engineering background. He's a tech guy, really by training, an expert in robotics, AI, all things technology related, is a published author and has distinct views on how VC should invest and what they should invest in. So my hope is that this will be a very vibrant dialogue. I think we'll have some fun with our panelists. We will welcome questions from you. Submit them through the chat feature. I will weave them in as I can. And to the extent we have a few minutes at the end, those that we've not been able to get to, we'll introduce and be happy to share with the group and invite our panelists' views on. So with that, let's jump in. I will say that I hosted this panel roughly a year ago. We were all together on the Brooklyn Navy Yard, standing room only, a very different environment than we face right now. And people at that point in time were focused on what Sidewalk Labs was doing in Toronto. They were very bullish on prop tech. But it was a year ago, and a lot has changed since then. So I'd like to kick open our discussion today with a question to the panelists as to what they've seen change over the past 12 months-ish kind of period. So anybody take that who'd like.
Sure, I'll jump in there. So one of the biggest distinctions we've seen with the new normal is that the distinction between a nice to have and a need to have has just grown dramatically. For a while, as the market continued to remain incredibly hot for both real estate and prop tech, the nice to have started to blend with the need to haves. And what we have found right now is both the buyer, so the landlords, the owners of assets, and the consumer, the residents, the tenants, are too busy managing their core business, managing the massive disruption that we've all faced due to the pandemic, to even waste any time on a nice to have. And therefore, they're focused completely on the need to have. So what do I need to make my core business function in the current climate, and how can technology fill in that gap? So the biggest thing for us is we've seen a massive spike in a lot of the technology companies we work with. And we've also seen with some of the companies that were out raising money in a much more challenging spot where sales growth has slowed, and it becomes clear some of the products are a nice to have. So that's the biggest distinction we've seen is between those two perspectives on software.
I would also jump in, Minta, and say, as a New Yorker and a prop tech investor, I feel like I'm thinking all the time right now about that Mark Twain quote, "The reports of my death have been greatly exaggerated." That, there has been a whole discussion, will prop tech remain relevant? What's going to happen in the prop tech industry during this period? And I actually think that I am extremely bullish coming out of the period that we're in now. I think that in terms, I've always thought that fintech is the best parallel for the industry-wide adoption of technology to prop tech. And, it is easy to trace that fintech was growing at a pretty steady clip up until 2008, 2009. But after 2008, 2009, the growth of fintech was really exponential. That's when we began to see more profound existential transformation in the business. And I actually think that COVID will serve a similar purpose for prop tech, that we are facing such core existential questions right now around our business and its relevance going forward, that I think that we're going to see technology adopted as a way not just to optimize business processes as they exist today, but really to provide the foundation for what it is that we're going to provide as a service going forward.
Yeah, and I think, for us, the way I've looked at it is, first and foremost, we're in a pandemic. Like, let's start there, right? So, and we've got a bit and ways to go. So if you look at that, this industry, a lot of the adoption and transformation has been really a cultural issue where people have such emotional attachment. There's not a lot of tangible attachment to the value they create in the system. It's a lot more in emotional attachment. And now we're distracted by family and, what our mission is. And I think people have released this emotional attachment to their profession and are really saying, how do I optimize? And there's just been a lot of resistance around technology, like, oh, are you gonna try to put me out of business? Honestly, now I've talked to people that are like, please put me out of business so I can be with my family, do transactions easily. I don't need to be at that fucking happy hour again. I don't need to be at that, So I think people are stripping down like what they core do for a living. And unless you're Tony Robbins, you don't make a living being on a panel or being on a stage. And I think everybody's just breaking it down to actual work product and deliverables. And so I think it's a great opportunity for technology that's truly transformative. And the COVID catalyst has really been a catalyst for creative destruction, and it's happening. And I think it's amazing. And there's people that are going to lose their jobs that probably the job shouldn't have existed a year ago. But now that we've taken this relationship business out of play, I think it's the time for tech.
So you've all alluded to a common theme here, which is that COVID's producing some transformative opportunities. Certain technology are going to be accelerated. Some are very obvious, some probably less so. But I'd love to hear from you guys as to what you think, are the short-term solutions. Not such a need to discuss them because they will be short-term and immediately responsive to immediate crisis. But longer term, what's been provoked here that you think will produce fundamental change that will not turn back?
So I think we've been talking for a long time about the shift in power between tenants and owners or developers. And I actually think that this crisis is really going to spur that transformation truly happening. That I think that we're really going to see tenants who are, ultimately our customers. We don't even use the word customer most of the time. They are going to have more power to dictate the terms around, they're going to dictate lease terms more. They're going to look for different types of services. And I think you could go as far to say that there's going to have to be a fundamental rethinking of the core of what our service is, and I think Airbnb has spurred this in the hospitality industry in some ways, but really thinking about, is what we do provide physical space, or is what we do to provide some combination of physical space and digital space to serve the needs of our tenants around whatever it is they're looking for, whether that is retail, whether it's office, even to a certain degree, whether it's residential. And I think in retail, we call this multi-channel, but we're going to need to think in a more multi-channel way in every part of the real asset world.
Yeah, and I think, like most things, right? Real estate has existed, and a lot of people have made a lot of money due to a lack of transparency. and knowing what things cost, and developers can exploit the lack of information on either side of the equation, and that's where the value is created. The reality is construction and land and all those things are highly commoditized, and developers have been able to create sometimes fake value, sometimes real value. And I think much like you see what happened with the automotive industry, where we went from haggling about buying a car, now you walk in and they assume that you already know everything about the product. They assume you know what the cost is. And of course they try to red herring, give you other reasons why, you should buy from them. But it's been highly commoditized. And I think the minute you get a level of transparency into the equation and then reduce all the friction that's involved in making a purchase, right? Starting to look at things as a customer, it changes the business. And I think that's where a lot of this tech, if you haven't educated, I've dealt with so many startups when they go out to look for their new office space, pre-co-working kind of trends, they had no idea. And then they look at you well, gosh, I'm sure I'm paying a lot for this space. Why is it so expensive? It feels like I could buy this space cheaper than I could rent this space. And then, they get the song and dance of why, it's better to rent than this and that. But I think once you start entering in kind of a level of transparency around costs and the consumer is more educated, it's going to change how people have to think about it. And so real estate, as an asset class for a developer, the consumer starts to get onto you, right? They start to understand what the costs are and what things should cost.
Hey, C, for you, how does the commentary that's been put out here impact the way you are looking at ongoing investments now? You're looking at a lot of them. You have clear ways you think about that. How does the transparency issue impact your investment decisions? What specific kinds of technology are of greatest interest to you, et cetera?
Yeah, so right now we're really focused on companies that fill in a hole. And to your earlier question, it has to be a permanent gap. So what we've done is, in addition to our standard due diligence process, we've added the COVID variable. And the way we view that is, how does the company solve the problem today and forever? And the way we've seen that illustrated is the companies that are going to succeed long term are not capitalizing on the current situation. They're capitalizing, and the current situation is the catalyst to close. So said differently, a great example is with closings. Traditional home closings were face-to-face. And even with a refinance, why do you actually have to go face-to-face to get something notarized? The DocuSign set an amazing precedent with just getting documents signed. With the standard notarization process or the closing, your mortgage needs to be notarized somewhere between 5 and 8 different times. And, how is that still a face-to-face transaction? For anyone who's done a refi, you don't need to meet your title and escrow group face-to-face. There's no intrinsic value there. So what we have seen is with one of our investments, a company called Notarized, they've really solved that problem. And the company itself is not really focused on capitalizing because of COVID, but it is absolutely a catalyst that has enabled them to expand a lot faster. So for us, we really you can look at the headlines, and what we do is in analyzing opportunities, how will it really have that longevity? And the key there is answering the question, is it really providing value to the end consumer or the property manager or owner? So for us, big data right now is huge. We think there's a lot of enormous opportunities anywhere from the tracking of people to the tracking of assets. Another category that we think is huge, along with what Kalia mentioned earlier, is just space utilization. Flexibility has been key. We think there's been a lot of missteps and mispricing of space maximization, real estate. I wouldn't really call them tech, but real estate companies. And right now there's this opportunity to actually provide long-term market value in providing more flexible assets, whether it be office, multifamily, or hospitality. So the key for us is we use a lens of analyzing how COVID is a catalyst to really enable the long term. One of the other huge categories is around in multifamily. Every other week there's an article around evictions. Evictions are being banned. What are the collection rates? NMHC puts out some great data around that in real time. And the key is providing tenants with flexibility, right? Tenants don't want to leave. They want to pay their rent. And the key will be to really help solve both sides, enabling the tenants to pay their rent and therefore getting the landlords paid. So we view technology right now as the great equalizer in this moment.
So KP, I want to turn to you immediately because you come at this from a different perspective, which is tech heavy, and Casey comes at it from probably prop heavy. So to pose the initial question, what are you looking at right now that you think is important, that you think is interesting?
Yeah, so I think the first thing I ask entrepreneurs, if you're successful, who loses, right? And I want to see massive losses, right? I want to see somebody go out of business. I want to see an entire industry not disrupted, but just taken out back and shot. And I think it's kind of a different thinking around it, right? Like I think like the way Casey was talking about notarized, that's like an incremental idea that says, okay, we should move this stupid thing called notaries. It's kind of dumb, right? It shouldn't really exist. That system is an old system, but guess what? It exists, and we're going to optimize it and make it digital, right? My question would be like, why do notaries exist? That's so dumb, right? So why can't we just get rid of that? So I think the way we look at everything is, and this is where we think of the COVID catalyst, is it's kind of like gloves off now. Like you don't have to say, well, how are we going to play well between the resident and the landlord and the management company? It's a little bit like, fuck them all. Like just make it work, right? Get all the inefficiency out of it. Get all these brokers. I was talking to one of our sovereign wealth funds that does a lot of real estate. And I basically did the math for them. I'm like, you understand only 80 cents on a dollar that you invest through all these funds, and then Evercore takes a slice and this guy takes a slice, 80 cents actually makes it into the asset. Everybody else has their hands out, but that makes 0 cents, right? So, and when you're talking about billions of dollars that all these hands are out, I think when you can say that technology will bring the consumer and the producer closer and closer together, this industry, there's so many people that are not producers and there's so many people that are not consumers. There's just like layers in the middle that, our thesis is that that's all like dumb. Like, let's get rid of it all.
It's interesting because my observation is that there's almost like 3 layers, and there's these really big disruptive ideas that KP is talking about at one side. Then there's technologies that are really going to be more around optimization on the other side. And then there's like a whole world of stuff in between. And, real estate is such a massive sector, touching there's so many different aspects of the real estate value chain that can be disrupted or evolved. And one of the things that I think is really interesting about being a prop tech investor right now is I may have different theses or core trends, but I also think even within each of those theses or areas of interest, there's probably going to be some version of like disruption, optimization, and then some type of hybrid. And the markets are big enough for all of those things to actually be sustained. And I think a really big thing for us right now, one of the reasons why I remain really bullish on prop tech is the quality of the founders that we have coming into the space. For me, ultimately as an investor, I have theses, I have ideas, I have things I know from working in the real estate industry myself or my relationships with other people, but so much depends on the quality of the people who are coming in and working in the space. And it just keeps going up and up. And there also are more and more really high quality founders coming into the space. And so I think at the end of the day, Minta, for me, like the ultimate decision factor around where I think the ideas that I think are going to be most successful is still resting in the hands of the person who's executing those ideas, and my belief in their ability to actually get it done. And I would just say that the quality of the people coming into our space right now to create disruption is really, really high. And, KP, I think you talked about data and the way that data opens things up. And, coming from the residential side of the business, I would say we're about 10 to 15 years ahead of the commercial side in terms of data being more open. And I was just earlier today talking to the Council of MLSs. And what's really interesting is that we opened up the data, we made it available to consumers, but we didn't really change the fundamental business model of brokerage when that happened. We didn't really recognize that we shifted from being guardians of information to being professional services providers. And as a result of that, there is massive value that's being created for people who are true disruptors right now. Whether you believe in iBuying or not, Opendoor doing this, SPAC IPO, valuing it at $5 billion is a really big deal. And I think we are going to see those type of models come into the commercial side of the business as well. I think we're going to see them inevitably, but those more disruptive models often have gained more of a foothold when the incumbent industry doesn't move quickly enough to respond to consumer needs as well. So, I think we can decide as an incumbent industry whether we want to make it easy or hard for those disruptors to come in and basically eat. We get to decide how much of the pizza they're going to eat by how much of it we leave on the table.
No, I think it's interesting too how you brought up even SPACs. I mean, I'm getting hit up every day. I mean, I did a lot of SPACs in the early *90s, when it was kind of considered shady, by the way, back then, and now it's okay. Chamath is doing them. It's cool, but I think I'm getting hit up every day by another SPAC, and it's interesting because they're all moving towards more of those incremental models, like an Opendoor, because that's the only way you can get enough size to do a deal. There's just not enough enterprise value, $400 million prop tech startups that aren't really more of a hybrid model, that aren't pure tech. And so a lot of them have been kind of moving that direction to, the Opendoor type of, or Porch, I think did a SPAC, right? They have that sizing that allows them to take the SPAC model. But I do think that we're going to continue to see, I love what you were talking about, the talent, right? We're still not seeing as much great tech talent, right? I mean, I spend so much of my time recruiting from out of industry, trying to convince a CTO, no, really, this is a great industry. I swear it's not terrible. It's and it's funny, the great tech co-founders, they're like, KP, show me comps. Show me the last 3 unicorns. You want me to leave where and come to this industry that hasn't had a Procore 17-year-old startup? Or it's tough because the smart tech founders that have been there, done that, they're pretty analytical, and they're like, why am I going to leave Palantir? I just got my exit package from Palantir and my stock and all that. You want me to come to prop tech? Come on, I was at Palantir, It's still tough for the tech founders because I think it's a lot harder to get them emotionally, and they look at the facts. So I think in order for us to continue to really recruit really, really good tech talent without me trying to twist their arm, essentially, we have to start showing some proof to really attract that tech talent.
So a question has come through that parlays off of comments that you guys have made asking, how you really think data is going to help the transparency, how you really think data is going to cater to investors and deal makers who are trying to figure out valuations. Where's that going to go? Where's the technology going to help around gathering? We've got that, but privacy, put that aside for a minute, and evaluation of that data. How's it going to drive value and create greater transparency?
Yeah, so the key here again is around timing. During the last financial crisis, 12 years ago, the rate at which pricing change was so dramatic right at the beginning that there just wasn't much understanding. There wasn't a known pricing. During the past 10 years, pricing changes have been a lot more linear. And then March rolled around this year and things went haywire. And so the key here is around when the market is steady state, pricing is relatively linear, and the traditional wisdom of real estate with, you can use your gut, use your feel, has a lot more value. What we find right now is, again, goes back to the need and demand for technology, is when things are disrupted, when there is massive change, you need a lot more information a lot faster. And to the point of transparency, by being closer to the assets, by getting data that's closer to reality, you get a lot more real-time feedback. So, for example, all of the TREP data around CMBS transactions or defaults, getting CompStack is another great example of actually leasing data in real time, where you can get an understanding of very local markets and what things are trading or transacting at. And then another leader in the PropTech space, VTS. They all provide real-time data to what is happening and what is actually transacting. Because right now, one of the biggest outstanding questions is, what are people's real estate values in their core assets? There's this massive dislocation, but things aren't transacting like they were 8 months ago. So what is my long-term stay hotel valued at? What is my multifamily asset valued at? There's this massive unknown, and more data right now around real-time comps is key. So to that point, getting that data is one of the most important things, and it's an ongoing thing. Over the next 6 to 12 months, we expect there to be this massive demand, and we've seen it already, a spike in analytics and data around transactions. And that goes back to what is driving portfolio companies of ours, is that demand needs to be filled by data companies. Where are they getting this data? It's the incumbents, the groups, the leaders in that space who have it in place already.
Yeah, I think the challenge with data is really kind of the bad data, right? And it's not bad data like it's intentionally, right? It's intentionally intellectually dishonest data sets. And a lot of that's the quagmire of real estate itself. I was looking at some data the other day with one of our investors, and they were talking about, people paying their rent. Like, oh, well, we've had this many people that pay their rent. Well, with the caveat that it was pulled out of their deposits, right? So this industry is very clever. And how you think about how you report things, even like leases, people talk about signing a lease, and then they don't talk about how many months of rent they gave free, or how they, moved it around the TI or whatever. There's so much clever gameplay that it's really easy to intentionally and deliberately give a lot of misinformation. And I think that's one of those things where people talk about CoStar's data is not great. It's is it not great, or is it deliberate misinformation by industry that's very self-serving? So I think part of it is, until we can get much more into the details and less self-reporting, this whole self-reporting aspect of data is super problematic. And how do you actually get into the facts and the real data to be informed? Because it's easy to make things look like whatever you want to make them.
Yeah. And I think, the motivation for us ultimately becomes, in my experience across industries, data yearns to be free, right? So the less that we do to lay the groundwork for data to be freely traded in ways that, in some ways, are structured for the industry, the more likely it is that we open ourselves up to models where that data comes in other ways. That I do think we will see increasing pressure for transparency. And I also think we're going to see transparencies in ways that are significant to the industry, but might not immediately come to mind. Like I just was sitting, Reonomy is a portfolio company at Bain Capital Ventures, and they are doing some really exciting work now around different kinds of data that they can start to almost like break down beyond just the data that would be obvious. I'm purposefully not specifically alluding to what they're working on, but they've got a fantastic new CEO who was one of the members of the management team at CapIQ for many years. And I think there is a similar opportunity with real estate data to the opportunity that existed with CapIQ and data around private companies and private market transactions, transactions in the private equity or world. And in those industries also, people felt strongly that the private silos of data gave them almost like sources of differentiated advantage. But now it is completely understood that that information is publicly available, and people still find ways to create alpha and generate meaningful fees. It's just that you have to slightly alter the way you're doing business.
Yeah, I think like you mentioned fintech, right? A lot of the back in the day when you paid brokers on commission and like all these weird fees, and it was like tucked in here and back channeled, there's just so much like that cleverness got kind of washed out a little bit of that industry. And it's like, oh, okay, now you're going to pay fee only. We're going to be more transparent with the transactions and how we're getting paid and where we're getting paid. If we can start tracking the hunting and fishing trips when all the shady deals go down, and there's like all these, and I've even had some conversations with investors talking about like property management, like, hey, how are they charging me? What are they allocating to the property? What are they allocating to themselves? Like, so I think your point about like fintech, I think, we can take a step out of what you've seen happen in that industry very quickly.
Yeah. I'd like to link this, to another question, which relates to sustainability, obviously a focus of this virtual conference this year. Is data going to help that? How are you all going to start to think about the degree to which data functions into your underwriting, your analysis, and the importance of your decision making around companies?
So when I started the firm, which is not even 3 years ago, a lot of my work before this has been around like the idea of waste in industry and waste in construction and real estate. I think so much of what we look at it is, when you look at 20% of a building ends up in the construction dumpster, and the people design and build buildings without actually knowing what the operating costs. Like we would never buy a car not knowing how many miles per gallon we get. And people do that every day, right, in this industry. And so I just think there's these people are focused on some of these nuanced things, these like, let's say kind of feature ideas around sustainability. But my point is like, there's such massive, big, juicy opportunities just to reduce waste out of the system. And we look at that, kind of every day. I mean, I basically, when I came off my sabbatical, which is now 7 years ago, it was just all focused on this idea that like we can make money, a lot of money, and do good because it doesn't have to be nuanced. It's just massive. I think we all on this call get tired of seeing the $1 trillion TAM, and and it's like the running joke. However, like it's true, like it's a fact. My question is never that the TAM doesn't exist. I'm like, how are you going to get your first 5 million in revenue? Like that's my question. But it doesn't mean, even though we laugh at the TAM, it's real. It's real. So you think about 2% of construction waste or 5%. I mean, if you think about if you can save 1% of construction waste, literally you can give everybody a free house. Like literally. I mean, it's that simple. So you don't have to move the needle much. And so we look at it as like big juicy opportunities to make a lot of money and drive substantial change.
I think there's a couple of other, I love the way you frame like these big, delicious opportunities, KP. And then I think there's also a very, kind of less sexy, it's more efficient. It's a better business to run your building in a way that's energy efficient. It's, there's some very practical NOI related, like in general, these are just smarter decisions. I think there's also increasingly going to be a tenant consumer driven. People are going to have a preference for being in physical assets that they think are optimized to be sustainable. And I think wellness and health and security are going to become a much bigger part of tenant decision making. And then I think it's real that there's a moral imperative, and that as much as we all want to make money doing what we're doing, I think most of us also want to feel like we're on the right side of, some major issues of our time, and that we're leaving a better world for our children or the children around us. And I think that's a major motivator for people in doing their work and feeling, interested and engaged in their work. So I think that there's a number of different platforms that, make this a very practical thing to do, not a sort of aspirational, hippy-dippy, pie-in-the-sky thing to do at this moment.
Casey, do you take sustainability into account when you're looking at your potential investment opportunities?
Yes, and the key is, again, driving value. I mean, I think climate tech sustainability has been a buzzword since the late 1980s. I mean, in my office, I have this advertisement from Honeywell. It's like this 1980s BMS system that they were selling to make your building way more efficient. And climate tech and sustainability has been a rallying cry, has been a sales strategy for decades. The challenge we are in right now is that we're seeing directly the effects of not doing anything. So the way we evaluate it is really around the ROI. And it's easy to say something is a sustainability focused product or health and wellness, or at the end of the day, the buyer needs to see a significant ROI. It can be like the pieces of that ROI can be moral, can be people's integrity, needs to be a portion, the dollars and cents. And to that point, at the end of the day, it has to be, all of those have to add up to a value that is significantly better than doing nothing. Because in real estate, the inertia, the momentum of just doing nothing is massive. So in order to overcome that stick with what works, don't change anything mentality that real estate is stuck in, the ROI for sustainability and really climate tech needs to be big. And when it is, it's the need to have. And you can see companies in this current environment where they are, to KP's point, reducing waste massively, increasing the efficiency of both teams and reporting. We've been invested in a company called Measurable, which is leading this space in terms of reporting. They've made it so easy to report. It has an ROI on the team side. It has an ROI on the building side, and everybody's better off. It's really that simple. And that's enabled them to track the largest amount of data around sustainability in the world. It almost has to be that simple. If it takes, a paragraph to explain what the ROI is, what the sustainability angle is, it's probably not there.
Minta, I think it's super important for this industry to start taking themselves more seriously. We are literally the last industry that designs a product, builds a product, manages a product that has massive permanence. This isn't something, I got the iPhone 12 and I'm going to throw away the iPhone 11. This is fucking like, we are literally shaping the planet with these buildings, and we have to take it more seriously of how we have to do things with permanence versus a trend, retail's dead, and so what, right? But if you're going to go out and design a neighborhood and build a neighborhood and develop take it seriously. Like, this is like you're changing and shaping culture of people's lives, and it's going to be around. We're not going to knock it down in 3 years and upgrade it, so to speak. And I feel like sometimes in the industry, we forget how important we are because we focus on, you know what, you do something great, you'll get the NOI. You do it the right way, the money will be there. But, if that's all you focus on the front end and you forget what you're doing for society and how you're going to approach it, and that your kids and grandkids may play there, I think it's super important. My dad was one of the civil engineers here in Atlanta, and I still take my kid and it's like, hey, your dad was the engineer on that building or this building, and that's a shitty building he designed, and whatever it is, right? Like, and I think we forget, and I know like the Berman, like they're generational, right? Like this is generational stuff that we're playing with, and we might be the last industry that does anything with permanence.
I think it's.
I couldn't agree with you more. I mean, I think part of this conversation kind of avoids at times the impact on the built world, which is exactly what you're talking about. I mean, the impact is profound, and it is undeniable, and it comes across in many, many different ways. So as we think about that, and let's assume we all understand and this community wants to address it, in terms of sustainability, we can measure foot traffic, we can deal with modular construction, we can focus on operational advantages around better efficiencies in HVAC and electricity and everything else. But what's like really out there that we should really be thinking about now as a community and talking about in a new way?
I think we have to think about, look, I mean, the social issues that exist in society in every country, right? Every country has their own social issues. That is a leading indicator of what's going on, right? And I think you have to start taking that stuff seriously and thinking about how you incorporate that. I was super fortunate to spend a year with Frank Gehry working all over the world on his projects, and you spend enough time with the Frank Gehrys and the Zahas and all that, and you pull apart like how they think about design. And I'm a civil engineer. I'm not an architect by any means. I'm just a groupie. And you think about how they think about the users and the people and all of that, and it kind of it doesn't cost much to think critically about your decisions. It really doesn't. And just the idea of just being careful about how you think about things. And I think that attracts the right talent too. I mean, I think we're just very comfortable, right? I think we've just gotten very comfortable, and I think we should be uncomfortable.
And does the ROI, one question, does the ROI need to be measured differently? Though, when you're thinking about these kinds of, moral imperatives, as clearly as said, is it different? Is it a different calculation? Right?
No.
It can't be different. You can't make it different, because if you're measuring it differently than the people with the money, then it doesn't matter how you're measuring it.
I don't think it is, but I don't think you measure it differently, because the value will manifest itself in that ROI. It's just not a simple spreadsheet. You might have to do a pivot table or two, right?
Well, Claudia made a really good point. The most efficiently run building, if you are measuring your energy efficiency, right? Measurables product measures the energy consumed by your building. If that number is lower, your overall expenses for that building will be less. You will make more money. Therefore, there's an ROI. So to Claudia's point, if you are running at a maximized asset, the most sustainable asset you can run, it will be better than if it were less sustainable in terms of how much money you make. Therefore, the ROI can be measured in the traditional way. And we're seeing right now the rating agencies, the big rating agencies, taking that into account, which is a massive shift in perspective and incredibly valuable to the overall economy by taking into account the institutional capital, by placing this other systematic measuring tool. It just provides more data, provides more transparency to what's actually happening.
Yeah, I think to Casey's point earlier about. Sorry.
Wait, we got to give Clearly a moment here. I interrupted her. Come on.
Two things I want to say. First, I think KP, the points you're making are so important. And I think they're particularly important right now when we as an industry are like the boogeyman du jour politically. And it's very easy, I think, for people to get into a defensive posture in the real estate industry. But I actually think we need to do the opposite thing right now, which is that we need to take on the full mantle of leadership, leaders in terms of that power that we have in shaping communities and shaping some of the story around what's going to happen from a sustainability perspective. And I think that is actually a beautiful antidote to the position that kind of we find ourselves in many different, I'm speaking as a New Yorker, where we're certainly seeing this play out right now. And then I also think that we have to look, I agree that there are all of these practical reasons why sustainability is so significant. But I also do think that sustainability is part of what is going to endure. And I think that's part of what KP is saying as well, that in general, in the industry, even though we create these durable assets, we tend to have a very short-term, not a deeply long-term focus. And I think we really need to have more of a long-term focus right now. And that, to me, I was going to say before, I always think of that moment when Lloyd Blankfein got up and said, I run a technology company, not a bank. And I think we're at a very similar moment in our industry where the true leaders are going to recognize that what they have to offer is different from what they've offered up until this point. And Minta, to your point about the alternative, we're living the alternative right now. We now know that an alternative is that we go wherever we want. We have virtually no interaction with the commercial office environment at all, and we're all okay. So that's the alternative. That's a much more sustainable alternative from an environmental perspective. If we reach a true crisis point, we know we can do this. And we as an industry, I think, need to head things off before everyone starts to say, this is not only easier for me from a lifestyle perspective, but from a sustainability perspective, cutting our office footprint in half, if that's what we're going to have to do, we know we can do it.
Yeah, and I think Casey made a point about the inertia, right? And we get asked all the time by large developers, hey, can you give us some insights? And the idea that you have a project that's a 5-year cycle and that you're identifying technology, like the technology should be identifying hasn't been invented yet when you're coming online in 5 years. And, and if you think about it within the rank and file, like to Casey's point, the inertia is like, well, we've always used the Siemens BMS system. Let's just go ahead and do that one, right? It's this idea of like, well, I mean, one, this industry, you're not rewarded for taking risks on things like technology because you feel like there's so much risk on the other side. But this idea, like the next time, I look at like small changes, right? In your own business, when someone says, the minute they say, we'll just do what we did on the last project, red flag, right? That's a red flag, right away. And I think that's where you have to challenge in a very detailed fashion. Like, well, why would we do that? Isn't that old? Like, how do we do it differently this time? How do we consider it? I mean, it doesn't mean that everything new and different is good. But, I think there's, in the 90s, there was no one got fired for hiring IBM. I think we suffer from a lot of that in this industry. And I think it's really about leadership asking better questions. The minute someone says, well, that's what we did on the last project. Well, that's not a good enough answer. Like, tell me something different.
That's an absolutely fabulous ending point. We are out of time, unfortunately. I think we could have gone on another hour here easily. But thank you all for your participation and your time today. I hope our audience found this interesting. There are a lot of questions that we were unable to get to, but let's keep the dialogue going, right? This is what we need to be talking about in this space and in this broad industry. So thanks again, everyone. Right. And thanks to our audience. Bye-bye.
Thanks, Minta.